Higher yields require high-performance crop nutrition. Through fusion technology, Microessentials is designed to increase nutrient uptake throughout the growing cycle. The unique chemical composition of Microessentials creates an acid zone around each granule. Lowering the pH promotes the formation of dihydrogen orthophosphate, a more readily available form of phosphate, resulting in increased nutrient uptake. With Microessentials SZ, plants more efficiently take up zinc because each nutritionally balanced granule delivers zinc evenly across the field. Microessentials also contains small elemental sulfur particles designed for faster oxidation to sulfate and increased uptake. The proof is in the performance. Research shows that plants take up nutrients more efficiently with Microessentials compared to traditional fertilizer blends, resulting in higher yields and higher profitability.
All right, good afternoon, everybody. Glad you're here this afternoon. A little bit chilly outside, but it's comfortable in here. I guess as far as under the lights and everything, it's not too bad. We were kibitzing about it being chilly, but it could be worse, I guess. So just a reminder that each of our forums is available online. The sessions can be viewed now, or you can actually click on the links at any time and go back and listen to them. Our panel today features Betsy Jensen of the Northland Farm Business Management, Bryan Doherty of Total Farm Marketing, and Randy Martinson of Martinson Ag Risk Management. I'm Randy Conan with the Red River Farm Network. Megan Turnquist over in the end. Don Wick is back there. You just heard Kara do the markets. Jay Rader is back here. Heidi Vittleson also is in the back there as well. So if at some point through our conversation here throughout the session, if it triggers a question or something, raise your hand. We'll get a microphone in front of you, and so you get that question asked before you forget it, which typically is what I will do. If I don't ask it right away, I'll forget the question. So with that, let's get started and talk markets and market outlook, I guess. Markets, especially soybeans, down hard yesterday, up strong again today. China, what is it? Is it demand? What is it?
I think it is. I mean, China came in and bought more, and they're continuing to buy. I think weather is playing an impact, with the frost up here in the northern plains. I think that's going to impact things a little bit. But I think the trade is expecting to see another decrease in production in the October supply and demand estimates, and I think they're pricing some of that in ahead of time here. But yesterday I was actually a little disappointed. I thought we should have seen a little more of a sell-off yesterday, or a little longer one, just to kind of clean this market up a little bit more. But the funds are defending their positions. They're in buying. We have seen some farmers selling that has helped kind of keep the push, I think, a little bit stronger. But today it was all about, I think, funds adding to their positions and the strong demand that we're seeing on the export market.
Yeah, I'd agree with that. The markets also move on other things, and some of those things are perception, money flow, that type of those things that when a market like soybeans really begin to move, the managed money, that is the funds, they've been buyers consistently. They're about 200,000 contracts long, which is really strong. So what's the backdrop behind that? Well, you've got other variables. You've got the dollar at 2-year low levels. You've got China needing product. But I'd agree with Randy. The last USDA report did trim yield back, but if you remember, the report before added quite a bit. So that was a heavy report. So there's a lot of people who take a look at this now and say, look, yield might actually be another 1.5 bushels lower. And if you take that into account and then take into account in China, these typhoons and rain systems that have come through, it gets really easy all of a sudden to take a carryout number near, let's say, 450 million, knock off 2 bushels an acre yield. Now you're at 300 million, and you might end up exporting more. So it could get really tight. And that's where the money is. It's already anticipating that potential. And it didn't take long today for a quick turnaround. He had export sale to China, and up it went.
What's that number where they consider that corn as pipeline? Is that a 2 billion? Or?
Well, everything's relative to usage. So when you look at the world record demand and you divide it by U.S. carryout or world carryout numbers, we're still in a comfortable zone. But if you were to take off another 2 bushel yield per acre and you drop carryout down to 300 million, that's going to put, I think, $10 beans as a floor and maybe push to $10.50 or $11.
Betsy, as a financial planner, kind of looking at marketing, working with your clients, how do you relate basis into this?
Well, when we did the cash flows this spring, we used 875. That was our planning price. And so if your cash flow worked at 875, and I don't think we ever had 875 while we were doing any cash flows, it was a wish and a prayer. We were hoping to get 875. And so now that we're finally over those levels with the combination of good basis and good futures prices, a lot of farmers have been making sales. The freeze definitely scared some of them in the northern plains. How much yield did we lose? And I agree. You don't want to oversell. But I would say almost everyone I've talked to for farmers has been selling a little bit of beans. Of course, you get more bullish the farther the market goes up. Your horns get longer every day the market goes higher. But I've been pretty impressed with guys being willing to take some profits, especially when you compare that to corn and wheat, where we don't have any profit potential. There's no profits in those markets at this time. Soybeans is one thing where we can make money.
Well, and that was going to be my next question was, maybe we backtrack a little bit to last Friday's USDA report. Before that, we'd seen some positivity in the wheat. Corn was so-and-so, but the soybeans was really where, bam. If those farmers hadn't contracted or sold anything, especially with soybeans last Friday, well, I think that was their day.
Well, and especially when I'm working with farmers on their cash flows, they're going to need cash. Cash is king. And so when you're looking at limited bin space, the ability to make your fall rent payments, your land payments, corn and wheat have good carrying charges. You should be putting those in your bin. Our basis isn't anything to brag about right now. You compare that to soybeans, where you actually do have good basis, good futures, no carrying charge at all. You're much better off, I would say, owning like a May call option if you want to retain ownership of soybeans than you are actually physically owning the beans.
Mm-hmm. Well, Randy, Bryan, anything else that really struck you from what we found out last Friday?
I guess, probably the number of bushel cut or the acres cut out of Iowa. They did come in and cut 550,000 acres off of the Iowa crop. That was a little bit of a surprise. We didn't see it cut in any of the other states. Nebraska didn't see it. Illinois didn't, but we did see a pretty good drop in the yield side of things. Of course, corn virtually, and part of the reason I think why corn hasn't seen a lot of move is the corn crop is virtually made. And the weather isn't going to impact that much right now, where we could still see influence on the soybean market or the soybean crop. And, basis level is okay for corn. I kind of agree with Betsy. I'm telling guys, move the beans off the combine, sell them, get the cash flow. What little corn we did get planted, we've got plenty of bin storage for it. Maybe put that in the bin, lock the basis in, and wait for a little carry in this market because there isn't a big carry. And wheat, December, I mean, there was a definite signal to put wheat in the bin with basis levels being at 45 under at harvest to being 15 under for December. So there was enough of an incentive to hold the wheat. So I think, we need to be selling the beans and holding a little bit on the corn. I'd argue on buying the May call. I probably wouldn't go that far out. I probably would do like a January or March. But just because South America usually takes our market in that January timeframe. So
the key is you buy the May, but you do not hold it until April 20th. You
Oh,
buy
you
the
can do
May,
that?
And then, no, you can sell those too. You don't have to hold them until they expire worthless. You can sell them in January when the market goes higher. That's kind of something that farmers forget about. Hold and ignore is more common with call options. And if they buy them and make sure you sell them when you get a profit, that's how you use call options.
Megan, I think probably the surprise of the report was there really weren't any surprises. The numbers were pretty much as expected, which still are kind of heavy for both corn and soybeans. I would label them as heavy, and the market, after rallying into the report, didn't tip over. So that was kind of the big thing. It's one thing to have the report, and then you gauge the reaction after the report. And with funds as long as they are, you could have really seen things spill and tumble, and they didn't. And here we're right back at it. So the market's looking at something different. It's looking further out. The other surprise, I think, on the report was more in the world numbers, for me at least. I took a look at what kind of corn imports are expected from China. The USDA has 7 million metric tons for the year. We've already sold more than that in the first month of the marketing year to China. So there's something more afoot in these markets, and that's why the money flow is moving the way it is. It sees bigger issues, and I think the big issue is weather in August and now weather in early September, both in China and the U.S. It's changing that potential supply and demand table.
Is that, when I looked at the numbers, the one thing that jumped out at me was the farm gate prices went up so much.
Substantially for beans, right.
90
Not so much for
cents.
corn, but beans really went up
Yeah.
despite really not a you only lost a bushel and a half on yield on soybeans, yet gate prices went up substantially.
But
That's a
what was
focus
it?
on demand.
About 90 cents or something like that.
90
Yeah.
cents. Yeah.
Yeah.
That was a surprise to see that too, And I agree with the China number with the imports. China, I think the next day came out and said they were going to import 9 million metric ton is what their number came in, but they've already, like you said, bought 7, almost 8 now from the U.S., 2 million from Ukraine, I think it is. So they've already bought more than what they've said they're going to, or what we expected them to. And there is rumors that they're possibly going to need to bring in close to 30 million metric ton because of the demand and because of the shortage because of the typhoon.
Right, and we kind of just ran some numbers. If the number that's been kind of floating around, maybe an additional 10 or 12 million metric tons from the U.S. So in 10 million metric tons, you kind of figure about 400 million. So if that came directly off of carryout, we're now at 2.1. Remember, 2 months ago, there was talk of 3 billion bushel carryout. So you can see the inverse relationship between the projected trend of carryout and price. So it looks easy to get bullish on corn. It's still pretty heavy out there, and there's, harvest will tell the story in Iowa and elsewhere. So far, just for what it's worth, early feedback on corn chopping and early number 2, pretty solid, pretty heavy numbers, yeah.
But USDA is a little heavy on corn exports already. I mean, at the
Robust,
2.2.
yeah.
Maybe that's a better way to put it,
Yeah. Yeah, I would agree. That was the other thing, not to take everybody's, but the numbers in August in particular, I thought were very robust on exports for corn, in particular corn feed usage. And here they started backing off of, they backed off of ethanol and feed usage this month.
And that plays right into the phase 1 trade deal. Are we going to see China meet that?
I expected when China came back into the market, we would have a big press release, a big signing of something, a whole Oval Office. I didn't know, Rose Garden. And China just kind of keeps quietly sneaking in sales. I thought that there would have been an ending or something, something to announce that, hey, we're back, we're going to start buying. And they just keep quietly buying those soybeans, quietly buying the corn. I know when we got to the initial phase 1, I thought, there's no way that's going to happen. They're buying. They are being aggressive. It's happening.
Randy, I would just comment on that too. After phase 1 was signed, there was kind of a big disappointment that we didn't see like this robust export market develop all of a sudden. And China had said, we'll buy at the right price when the need is there. And so after prices didn't really rally, I think the analytical world looked at it and said, well, South America has a lot of bushels and And they'll probably, they and China will probably be in the U.S. market sometime late summer and fall. Well, here they are, and they're buying and buying aggressively. Their hog herd is expanding at a faster clip than initially thought. And with weather events and other things, it looks like they're aggressively buying. I never really took the idea, though, that China buys on price. They buy more on need. Whether corn's at 320 or 360, what's the difference? It's still a bargain. Yeah.
Yep.
How does Germany's case of African swine fever play into this?
You know, as far as the hog herd is or the hog market is concerned, it takes an exporter out of the market. And right now, everybody, of course, has said they're not going to import out of Germany. But I don't know how much hogs they actually produce and how big of an impact that's going to have. But it did help our hog market a little bit, and it expanded. You know, we saw some pretty good push at it, and it helped the cattle spill over to that a little. I don't think it'll be a long-lasting thing. If we see more cases start to pop up, it'll get to be a bigger issue. But I think it's kind of a flash. And
Does that impact the corn market at all?
I don't think so. I mean, we're still going to feed the hogs. We're still going to see the animals. I don't think it'll impact it much at all.
My bigger fear, I guess, is, that China and the European Union are meeting this week to discuss exports and trade. And that's a little scary. It's almost like they're flaunting it. Maybe we don't need the U. You hate to see someone you want to sell your commodities to meeting with somebody else. And so I hope that everything goes well and the U.S. Still has a good market when this is all over. But the World Trade Organization announced this week the U.S. was wrong for some of those tariffs, and now China's meeting with the European Union. I don't know that this is a market that we want to take for granted. Very grateful for the sales we have right now, but I'm cautious. I'll put it that way.
So I have a follow-up to that in just one moment, but I don't want to forget about our audience. If anybody has a question, you can raise your hand now. Somebody will be floating around. We have Jay in the back that can bring the microphone for you, so make eye contact with him and he will do so. So my question now is, where do we factor in COVID? What sort of impacts are we seeing on that, not only with the markets in general, but with buying habits, supply issues, that sort of thing?
Israel just is shutting down again. And just in terms of perspective, I had to read the article a couple different times. They are not allowed to go within a third of a mile of their house. So it kind of gives a little difference for population density as well. Imagine us not being able to go without a third of a mile from our front door. None of us would be able to go anywhere. And so it is still an issue. I mean, we are not out of the woods when it comes to a world lockdown. Fuel demand is definitely low, which affects ethanol. It is still hanging over our heads, and I don't know that the possibility of a second world lockdown is still there. I firmly believe that.
I would say I don't know. I don't know if anybody knows. The first go around, the shutdown really created some urgency and some pain for the energy markets, and then consequently, the straw that broke the back for ethanol was really the trade war between Russia and Saudi Arabia. But nonetheless, if you've got this perception again that lower energy markets and ethanol demand will not reach USDA projections, you're likely to get that trimmed lower, that total usage out of that side. So I think that's the perceptive. Now, on the other side of the coin, the world continues to move on, and we move on, and people are getting kind of tired of hibernating, and we go out and we do things, and we test more, and we're safe, and we're here. So I think it has, if I had to guess, impact, but minimal, and I'm not sure. The first go-around, we weren't sure how commodities would be impacted, and there was a short-term impact, but we're still using and exporting, and world demand should be at record paces.
Randy, anything to add?
Well, yeah, I kind of agree with Betsy. I think it's inevitable we're going to see something come into play here that'll cause some type of shutdown, some type of disruption in flow. But I'm going to look at it from a different perspective and look at it from the wheat producer side, because that's what gave us a really strong wheat market, and hopefully we can get that back again. It was actually the domestic demand that really kicked in the wheat, because everybody couldn't go anywhere to buy bread. There wasn't bread on the store, so everybody started making their own again, and our flour demand shot up. I think that's what we need in the wheat market right now. So it needs something.
You know, I have read that if you want to do Christmas baking, you should have your flour by now. So I've read that from a few different places. So go out and buy your 20 pounds of flour. Make sure you get the white flour and the whole wheat or whatever else you need. Just go buy flour, everybody. That'll solve our problem. Yeah.
Well, and Betsy, I know you're a big proponent for the spring wheat market.
That's right.
And so we were talking about this before we got started. The farmers that have grown wheat, always grew wheat, they're still going to plant wheat. So how are they making that pencil out on paper? I mean, we had a little bit when we hit $5 wheat a couple weeks ago. Farmers sold because at least they could break even, but how do we justify planting wheat in this current market environment?
You know, there was a period, I would say the early 2000s, that wheat had a full carrying charge for like 4 or 5 years in a row. I mean, it had a trading range of like 40 or 50 cents, and that's all we had out of it. And so if you can plan ahead, you know, you could have had $6 futures for December delivery. You had to plan, 18 months in advance. But the same thing is true today. There is a full carry for 2021. There's a full carry right now, even, you put your wheat in the bin, you can get 40 or 50 cents more for a March delivery, by the time you factor in your basis improvement. So wheat, I guess personally in my area, yields are disappointing, so I don't know that we're going to be able to make money. We just had too much water, too much drown out. But overall, there are better prices out there, but it does require you to plan ahead. We can't sell it cash. You got to forward contract it and sell it for a deferred delivery. Use your grain bins to store sold grain, not as hope chests. Okay, we call it you hope prices are going higher. That's probably not a really efficient use of grain bins this year.
That's the nature of farming. Rarely does farming offer you significant gains or profits that you can lock in, and if it does, you should sell ahead and forward sell. And then it's the cat and mouse game. Well, if I don't plant spring wheat, I got to plant something else. If you're planting something, then I'm in a different market that isn't working. Now spring wheat prices go higher. So really, it kind of boils down to if you stick with what you do and you do it well, stay with it, sharpen your marketing pencil, look ahead, forward selling, those kind of things. We call it scenario planning, a balanced approach. That is, utilize all the tools in your marketing toolbox and be familiar with them so that you can implement them. So you think about the next year out, we're talking, well, spring wheat prices aren't offering much. Well, we don't know what the weather's going to be like worldwide. We've got an ample supply right now. But a year from now, things could look much different. And all you got to do is look back a year and look at all the different things that have changed and come into play. And, soybeans 2 months ago were on their deathbed, or at least in April, and now they're the darling market. So it's really not a matter of trying to look ahead and grumble about which product should I produce. It's really about waiting for those opportunities and taking advantage of it, whether it's 6 or 8 or 12 months before harvest, or maybe it has to be after harvest.
Mm-hmm.
Tough to add. And one thing that we've seen as far as wheat, and that's part of the reason why the discounts or when you sell, just what the quality is going to be. And that's what's kind of pulled wheat acres down, and not just spring wheat, but winter wheat as well. Right now we're looking at the winter wheat planting is taking place right now, and it's likely we're going to see more winter wheat acres get planted. And that is going to impact some of what happens up here with our spring wheat as well.
Mm-hmm. Well, and lately, another market factor we should maybe talk about is the weakening of the U.S. dollar. How do we factor that into what we're seeing in the markets currently?
From a macro perspective, having the weak dollar and having low interest rates, the Fed announced 2023, we're going to leave interest rates low until 2023. So the weaker dollar definitely means we have exports. And then the low interest rates, that's what I'm hoping will pull some funds into commodities as well. I didn't realize that the acronym TINA bonds, I guess that was something new to me this year. TINA stands for there is no alternative. So you buy these, so we can call wheat maybe the TINA crop sometimes. There is no alternative. But people are buying bonds that have negative returns on them, but where else do you put your money? And so that's what I'm kind of hoping that will pull maybe money into commodities. Maybe soybeans look a little better, managed money. They want to start buying some physical commodities. Look at gold prices. I mean, those are incredible right now. So from a macro perspective, I am hoping there will be some incentives for commodity.
Well, that's the whole thing too with all the money, not just in the US, but globally, that's been thrown at this COVID pandemic. It's got to cause inflation or deflation. And if the US currency is devalued, but so is Russia's, it doesn't help us out any.
It takes away investors, it takes away money, and same with China. You know, they're a big investor in the U.S. and Japan, and everybody's kind of feeling the same pinch. But you know, we do have sectors of the economy right now, or sectors of the commodities that are showing inflation. Gold was a good one. Silver is a good one. Lumber right now is doubled in, I think, 2 months' time. Lumber's doubled in price. Copper's seen a good push, you know, and lumber and copper are good indications of the economy because it shows expansion, it shows building, it shows infrastructure. You know, we just haven't seen it spill down into the rest of them, the commodities yet. And maybe that's what we're seeing. Part of what's going on now is it's the inflation coming into the grains to help push it, and the funds doing the buying. And you know, how far it'll go, I don't know if we're going to see it the same as we did with gold, with the, 30%, 40% increase in value. I think we'd all like to see that in the commodities, but I don't know if, because we've got that pesky little world production thing that we got to deal with too in supply and demand, but maybe that's what we're partly seeing.
I agree with somewhat. I think we are seeing the money though already reflective, and to Betsy's point too, if you look at, if I am a manager of money and I'm trying to decide where I want to invest and put my money, I can't earn anything on interest, so why I'm not going to earn anything. So that's probably out. Gold has already gone up. Silver's already gone up. Where do we put this money? You probably put it into the commodity markets, looking for at some point some inflationary play with all of this debt spending, or maybe just put it in cheap corn. It's lower than the cost of production. China has 5-year high prices in corn internally, so. You know, I keep going back to China, and so I can make this argument that, you know, we could see things really look a lot different. And so we want to, as farmers, be prepared for that. Now, will that happen? I don't know. But if it did happen, we shouldn't be surprised. I keep going back to kind of the flow of commodities. To Randy's point, the world's figured out how to produce a lot of commodities, but the world hasn't had a lot of weather issue the last several years either. So if we really stub our toe somewhere, and we saw some hint of that in Europe this year with wheat, it didn't take long for wheat to rally quickly on that. At the same time, COVID kind of struck, and then they were pulling back inventories.
Plus, we get the weather guys forecasting the La Nina word keeps popping up here lately.
Yeah, for sure. I want to check with our crowd just real quick. Do we have any questions out there? We'll walk around with a mic and just flag Don down, and he can get our attention. But while we talk about some maybe different factors, you know, like currency, my other question is, what other outside factors are influencing these markets? Obviously, energy has been a big talk as well. You know, we heard a lot about ethanol and that sort of thing, oil.
We covered kind of that ground, but I would say first is just world weather developments. First, we talked about wheat. Well, wheat is produced in every major country of the world and harvested 12 months out of the year. So that's almost a continuous weather market. About 2/3 of the world's corn crop is northern hemisphere. So we think we've got a really good crop here. We think China's crop is going to be downgraded some. So those are things to watch. I would start watching the weather in southern hemisphere. Usually I'll tell our clients that, hey, look, weather really doesn't count until about the 15th of December. It's kind of like our 15th of June. So we'll watch that. But I'd watch currency. The Brazilian real seems to have bottomed out and starts to move higher. The U.S. dollar is heading the other direction. I'd watch flow of commodity. Brazil appears to be out of soybeans or corn, or at least they've lowered their tariffs now where they can actually import. So little anecdotal things like that. And then watch the money flow. The money is buying these dips, and we haven't seen anything suggest that they're not going to buy the dips until they don't. So we haven't seen that yet.
Yeah, you know, with Brazil, I think is the big one to keep an eye on. You know, the southern hemisphere. You know, right now Brazil is about ready to go into their planting season. They actually do things a little different in Brazil, where the government tells them when it's okay to start planting, and they've gotten the okay to start planting in the central part of Brazil. They haven't done it yet. They're more likely going to start in about October. I work with a couple of different groups down there and visiting with them. You know, right now they are looking at expanding their soybean acres, and it's likely going to be more than the 3% that they've talked about. And they've also got about somewhere between 40 to 50% of next year's crop already sold. So that's going to force them to get these acres. Now, weather is going to be the big factor there, whether or not they can produce the crop. I mean, what's USDA estimated at 133 million metric ton, which is 10 million, almost more than this year. So they're expecting to have a very large crop coming out of Brazil, mainly because of an increase in planted acres. But if weather comes in and does a hiccup in production there, like we've seen in Argentina, and even like we have seen in Brazil for this last year as well, that could really help explode this market. And I think that's the main, that's what I'd be paying attention to right now. What I'm surprised is their corn crop. They had a very large corn crop overall this year. I mean, it was a good-sized corn crop again. But yet, we haven't heard much about their exports, but their price of corn in country has been expanding because of inflation. They need to import corn to bring the price down. Where did all that corn go?
Yep.
Feeding it?
Some of it's got to go to feed, some of it's probably gone into the export side of things, but nobody's really talked about where that corn has gone and where all that supply has gone. I think that's a good question. I don't know how to answer that one either.
Yep.
We could argue the same thing. Again, just looking at numbers, supply and demand table, China has 3 times the amount of corn on hand in theory than the U.S. does. Really. So why do they have 5-year high or, close to record high corn prices? So, I think we can go back to the idea that low prices cure low prices, and we go back about 5 years ago, and corn prices historically, they have high prices and they go into a trough, about a 3 to 5 year trough, and this is extended into 7 years. And that's because the last 2 years we've had some extraordinary negative events, whether it be ethanol waivers, whether it be, planting corn to no end for market facilitation payment purposes, and whatever you want to call it. So on the books, we've always had expectations for a lot of corn, and then we've had good crops. So what's going to get really interesting is if we're extending ourselves past sort of that window and we're seeing anecdotal evidence like Brazil, like China, what happens if we have a weather market here? Mm-hmm. So the point of me continuing to stress is it's really important for us to maybe get out of our paradigm or our tunnel thinking that $3.20 corn, well, that's not great, but it's better than $3. $3.65, $3.75, wow, we better sell everything under the roof. Well, maybe you should for cash flow, but learn how to use those tools to retain the ownership of it and balance that approach out, because I don't know, I just think we're one weather market away from corn prices doubling in value in like a month or two. That's how fast it'll come. In 2012, the rally was over $3 in less than 60 days.
Mm-hmm.
That's what I was thinking when we look at this market, beans, it's so unusual to see prices rallying at going into harvest. Should we be pricing some of that 21 crop at this point?
We have August rallies in beans before because August makes the bean crop. Mm-hmm. We've had, we go through the whole summer and everything's fine. No one worries about it. Then all of a sudden August comes around and it's dry and the soybean market takes off. So when you're looking ahead to 2021, remember the market's inverted. So you're not going to get the price that you're going to get today. It's still a decent price. And that's why, talking about reownership, if you sell all of your 20 beans, you want to reown in the 20 market. If the beans are going to rally, it's going to happen in January, the March, the May futures, one of those futures. It's not going to happen for 2021. That's a whole different crop year, and we don't know what's going to happen there. And so for selling 2021, it's not bad. It's not a bad place to start making sales. 960?
66.
966 is where we closed today. Given the basis that we have, if we can get today's basis next year at Harvest 2, you're looking at over $9 cash off the combine. And in a perfect world, that's the worst you do. That would be a wonderful thing to happen.
Speak to that, Betsy. What's holding this basis together?
It's China. We complained when the trade war hit because the Northern Plains took the brunt of it. We did. We didn't have we don't have crush plants. Everything has to go west. And we took it in the shorts when that trade war started because we didn't have anywhere for the beans to go. Now China's buying, and we're back on top. We can shift those beans west pretty quickly, and that's where they need to go. So what was a huge disadvantage to us a few years ago is now kind of turning into an advantage.
You look at our exports for soybeans, and before the marketing year just started, last week? And we have already sold 51% of USDA's expectations for soybeans as the year is just starting. So that means we only have to sell 49% in 12 months. Well, traditionally, we have to sell a lot up. We're front-loaded. Corn, I think, is 33% of our expectations for exports have sold for corn. Now, the problem with that is that they're sales. You know what can happen with sales? They can be canceled. Shipments can't, sales can. And it's likely that maybe some of these might go to the wayside as we go forward, but we have had a very strong export market. And a lot of those beans are coming out of the Pacific Northwest, which means it's beans out of ours. That's why our basis is strong. Elevators need to secure them, get them at harvest, get them on a boat, or get them on the train, get them to the ports.
Don, to get back to your question, the answer is yes. And so if I'm sitting in the audience here, I'm listening to us, and this is all great and interesting, but who knows? I'm a big proponent of the first third of your crop you sell on value and price. So if it's hitting your value and price, whether it's 12 months before harvest or whatever it is, make those sales. Part of the problem with marketing the last several years in particular is that when the markets do tip over, they tip over so fast and so hard, it's hard to catch. It's akin to that trying to catch a falling knife. Corn, as an example, up until this year, the last 6 years when it reached its high, whenever that was, in May, June, July, and that after January 1st, the market went from the high to the low in 72 days. 72, that's it. So you better be on your horse and know when that turning point or that tipping point is. So a way to sort of level out that heartbreak when prices drop out really hard is to sell early and sell often. And sell the first 25, 30% on value. And if you know how to retain the ownership or you have an advisor, talk to them about how to do that. There's a lot of fixed risk, quantified risk ways to stay in the marketplace and in front of the market. So I'd concentrate a little bit more on strategy and worry the first third of the crop selling on price.
So Don, in Minnesota, we have this beginning farmer tax credit program, and it encourages farmers to come and work with farm management instructors. And so I have a lot of young farmers in my program now, and it's so interesting to work with them because we're doing their cash flow, and they said, well, Betsy, where should I put this $6 wheat sale? I go, you're what? Well, yeah, I sold wheat for $6. I go, you did? Well, you sent out the email, and you said you were doing it. And I said, well, yeah, but nobody ever does. It's just a whole different mind game with some of the younger farmers that are willing to look at those prices and go, geez, $9.66 today, and I can hopefully get the 60 under basis like we have and end up with $9.06. But it's a mentality that has to be changed a little bit. But yeah, like Bryan said, if you got your first third, your first 25% at a good level.
It kind of boils down to if I want to place a bet somewhere, I want to place a bet. I'm going to bet on you to do everything you can to produce the best crop you can. And you've got an agronomist you work with. You've got all this what I call your management circle, people that you reach out to information and they give it back, and you make these decisions. And if weather cooperates, we know we're going to have big production. So we have to prepare for that. At the same time, you've got people like us talking up, especially me today, talking about, geez, we've got some what-if scenarios that things could really, really take off. But, boy, I just think in these low trough years, and you just gave an excellent analogy, that looking ahead and looking for opportunity and selling the value really makes a difference in a lot of, for a lot of farmers, especially when prices are low over an extended period of time. Those early sales are really helpful. They're pivot points. Hopefully your first sales are your worst.
Okay, I'll be the contrarian. I wouldn't sell. To me, it's when you look at where the market's at, we're at 10 whatever today, 10.06, something like that, 9.66. To me, it's too much of a spread between the two, and I think there will be a little bit of tightening of that. They are expecting a huge crop out of South America. That's what we're pricing in right now.
Yeah.
The only way I would look at selling 21 was I'd put stops underneath that market, so that I would leave the upside to go, and I would run a stop 15 cents below where the market's at and keep raising it. And if it gets triggered, I'd make the sale, but I wouldn't just go out and sell that level right now.
I would like you all to get out a piece of paper and write this down. You cannot forward contract 21 beans in July of 20, okay? Somebody's going to tell you to do that. I can guarantee you there's going to be an advisor out there that says, let's sell July of 20, and then we'll just roll it ahead when that spread narrows or something. And that's a bad idea, okay? That is something that could explode in your face before you even know what hit you. You know, if everyone wants to talk beans in the teens, it is potential that July beans could be 13 and November could be $9. That is a possibility. So if you take anything away today, if somebody tells you to sell 2021 beans, and let's just use like the May or July futures, it'll be fine. We'll roll it ahead later. That makes my stomach turn about 8 flips.
Keep it in the crop year.
What's that?
Keep it in the crop year.
Yeah, keep it in the crop year. That is a speculative trade. That is not a hedge, and especially in soybeans, that makes me very nervous.
Mm-hmm.
Seems like, too, we have a lot of what-ifs right now. We don't know how big this crop is. We've got a weather issue that Iowa had with their corn with the derecho. They had dry areas in the western areas of Iowa, eastern Nebraska. We don't know how big this corn crop is, or even the bean crop for that matter.
No, we don't. I mean, you know, we've got an idea of how it's going to come in, but, you know, the nice thing is harvest is right around the corner, and we're going to start to see some of those yields start to come into play. You know, I've had some reports in beans being harvested in Iowa that were coming off at 22 bushels an acre. Well, nobody's really telling you that because they don't want you to know that. But then you get into Kentucky and into down into Mississippi, huge yields for corn. I mean, good crops. Now, when things start moving north, it's going to be interesting. You get into the big producing states. Iowa is going to be the one that everybody's going to be watching. And I think that they'll watch corn there. They're going to watch the beans up here to see where our yields come into play.
You know, I drove to Des Moines a couple of weeks ago, and so it was just on 35. It's not like I took a crop tour, but I was not prepared for the flat corn. I mean, I know we've heard about it, but seeing it physically was just sickening to my stomach. I mean, it was heartbreaking. And even worse than that, I mean, I kind of knew the corn was going to be flat. I didn't realize how dry it was going to be. I mean, the Des Moines River is a trickle at this point. I mean, it was kind of eye-opening to see how dry it had been. Then, ironically, all this corn ruined from a storm that had gone through. So it will be interesting. USDA has already made changes, though, to Iowa. Some of that has already been penciled in, but that's a huge wild card, not just because of the storm, but also because of the dry weather.
No, I was going to ask this question when we were talking a lot about 2021 and different pricing options. But in general, we see it now. A lot of farmers aren't able to physically be here because they're harvesting. They're getting fall field work done. I mean, they're out there working. Last year at this time, we barely started harvest. And so just given what we know right now with the 2020 crop, what are expectations for 2021? You know, are we going to see bigger soybean and corn acres in a more quote-unquote normal year, especially here in the Northern Plains? What are we starting to talk about?
Well, I think I saw a national survey that is already projecting a 3% increase, I believe, in U.S. soybean acres for next year. But we still got a long ways to go, and it's the market's job to convince us what to do. You know, I think this year in the Northern Plains, our corn was down so much because who wanted to plant 20 corn when you still had 19 in the field? That just wasn't real enticing. And the corn crop looks pretty good this year. You know, if it made it through the frost last week, the corn yields overall look good. So I'd say in the Northern Plains, maybe adding a few more corn acres for next year.
I think at this point it would just be speculation. It's just talk. It's farmer talk. To Betsy's point, price will determine that, and those decisions will be made months from now, depending on what it looks like. So, but you know, beans. To back to Don's question, if you are thinking about selling some at some point, or they hit price levels that you can live with, well, then maybe we start to lean toward a little more bean acres this year. But it's too early for me.
Interesting, though, is that all the seed salesmen are out selling corn and soybean seed for next year already. So You know, and right now you look at it, from what I'm getting and what you're seeing out there and what I'm hearing from producers, we're going to see more corn acres. You know, if you look at the southeast part of North Dakota, corn has been king, but this year because of the prevent plant, I mean, guys didn't push the envelope like they did last year. That last quarter of corn that they planted last year, they wish they wouldn't have.
Yep.
This year, they wish they would have because the corn looks that much better. I mean, we're going to we could rival 2012 yields this year for corn, which I believe was a record for the state of North Dakota. And well, I wonder if it wasn't for Minnesota. But that's going to bring, I mean, and everybody's memory is only as good as last year. So because we're going to see good corn yields, we're going to see more corn acres planted. And because of the big prevent plant that we saw in North Dakota, there will be more corn acres. I think we'll see less wheat acres. Even though wheat did pretty good, you're going to see wheat acres pushed more to the north in North Dakota. Beans, of course, are going to be everywhere. But again, the difference between corn and beans that'll come will depend on price.
Well, and my question is too, what about some of these specialty crops that we're notoriously known for?
I was just going to bring that up. You know, up here we're so fortunate to have all those specialty crops. Can't imagine being somebody in Iowa that has the option of corn and beans or beans and corn. And so at this point, I don't know that anyone's aggressively bidding for. I haven't heard any great edible bean contracts or sunflowers for next year, but those certainly come in. But at this point, I don't think I've heard any contracts for specialty. Randy, do you know?
I haven't either. I think they're waiting to see where the yields come in this
Yep.
year. Pintos have potential if we see a little, because we needed to increase pinto production, I think, like 1.5 times just to get stocks back again.
Yep.
And if we don't see that, we're going to see some pretty attractive pinto bean contracts again next year.
Well, that was the thing, you know, Northern Plains really ran into a pickle, particularly with dry bean seed supplies this past spring because, you know, fall of 2019 harvest just didn't go good. I mean, we still have some areas, though, particularly in the Red River Valley, where there still isn't going to be a great dry edible bean crop. It was too wet for too long. So, you know, maybe there's some potential there with coming off of 2 years of trying to keep up with supplies.
No, I think there are some edible bean varieties that might be attractive for next year. I don't know that navy beans are going to be that great. We seem to have ample supplies of those, but some of those specialties, keep an eye out for those.
Mm-hmm.
At what point do we, this is maybe more of a Betsy question, lock in some of our expenses if we're forward contracting? Do we need to be thinking about paying for our fertilizer early, our fuel?
Yes. I do have farmers that have already locked in fertilizer for next year. I have to laugh. So fuel this year, I bought fuel, I would say, like on February 15th. I mean, it had plummeted. I had no idea it was going to keep going down from there. But so we are fortunate to have these low input costs. And so when we're looking next year, I know, you know, wheat doesn't look attractive. We probably have, I didn't look today, December, Minneapolis, 575 futures maybe. Not that great, but if we can have low fuel, low fertilizer prices, it definitely makes it look more attractive.
Mm-hmm. Well, Don, I know we're getting into the final minutes, but what do you got?
I look at COVID and trade wars and everything else. It seems like we've taken on a more nationalistic type of attitude, not only here in the U.S., but globally. You look at what's going on in Brexit and Europe and those kind of things. Do you see more protectionist trade policies coming in, and does that impact our trade or export situation?
I'll take a stab at it. I don't think so. We got an election coming up, so we'll see what that does. But I don't think so. I think the goal is to keep the dollar on the defensive and export everything we can export. So I think that's our current goal.
I think we've discovered there's some things we want produced domestically that we don't. But as far as food production, it seems like, you know, there was really not a lot of impact for us for food production. I can't think of anything that I wasn't able to buy besides flour and yeast. That was tough this spring. Other than that, I don't know that there were any fruits or vegetables or meats.
Rice-a-roni.
Was rice-a-roni tough to get?
Yeah, that was tough to get.
Oh, hey, chicken gumbo soup is
Yeah.
tough. Yeah, there you go. But for the most part, you know, we've been able to buy just about anything you want in the grocery store. What a fortunate economy we have in the U.S. to be able to provide that for us.
Yeah, we did see maybe the meat cases were a little emptier but you could go down to your local butcher shop and get it.
Yes.
Or you call the local feedlot and,
Yeah.
and get it,
Yeah.
you know, try to buy a freezer yet. You still can't get a freezer. I think that they've got, I think there's still a 3-month waiting list for freezers, but just because everybody went to the local feedlot and picked out their own animal that they were going to butcher. So, but I guess I agree with Brian. I don't think we're going to see any anything as far as trade that's going to, I'd see a lot more one-on-one deals taking place, especially, if Trump gets reelected. We'll see a lot more unilateral instead, instead. But other than that, I don't see anything issues.
Question that could just pop in my mind. We're talking about all this demand, the export demand. At some point, do we run into a logistics problem, moving all this grain out, being able to ship it? Especially when we're talking corn and beans at the same time.
But keep in mind, part of our logistics logjam a few years ago was fuel, and that demand has declined. We don't have the tankers running steady from western North Dakota like we used to. I think we're going to be okay for logistics. I think we will be able to export it. I'm not sure that that's a big concern that I have.
Ports might get backed up a little bit, but that would be I think the only issue we would have is actually getting the ships loaded and get them moved. And we haven't had a problem yet, but we also haven't sold 2 billion bushels of corn and soybeans, and what are we looking at? Close to 1 billion in wheat, or 975 in wheat, so.
I guess I would have the confidence in those making the deal, that that's all part of the deal. The problem could be if you have a COVID like we had in China and you can't move anything, or, I'm not sure if you were referring to this, but the energy, I think there were, 17 or 21 ships demerged off the West Coast that couldn't unload for 30 days or 45 days. It costs a lot of money to have these tankers sitting there. Other than that, I don't think so. You're talking maybe something with rail or something, but all that seems to be more,
I was thinking more like
temporary.
on the West Coast ports where they typically like to load one commodity at a time when they fill their silos up.
Yeah, I wouldn't expect it.
Yeah. Well, I know we're getting down to the wire here, so I want to give you all one final chance to share your thoughts. Give us a minute each, kind of what's good, what's positive, what can we leave here and walk out the door and be happy about?
So I think we can be happy because China's back in the market, and we have waited for this for a long time. And so this has been our opportunity. We have, I know soybeans look bullish, and I would love to have giant horns on right now, but I'm trying to be realistic when it comes to farm management and realize that I just need to make money after how many years of mediocre prices. So sell the carry in wheat and corn, sell soybeans. If you need to re-own, that's what call options are for. And there's brokers here who can help you re-own those. That's not an issue.
Brian?
Well, let's break it down into this. What can we be happy about? Volatility is back in the markets. We've had some uncertainty. We see uptrending markets. We see money flow into commodities. Those are all positives. That can change in a hurry and disappear. But it's feeling more like the environment of several years ago, or the late, let's say 2006 through 2012. We haven't had any real demand drivers in the marketplace for a while, and we're seemingly seeing that in China. And again, we step back a little bit. African swine fever, just devastating to world corn demand 2 years ago, last year. That's changing now. So we've got to change. We've got winds blowing from a different direction, it seems like. So the opportunities there now are really, rather than maybe store and hold, look for carry, sell carry in the market, look for basis improvements, really stay on top of the marketing. This last spring, there was an argument for, look, things are kind of ugly, let's just bury our head in the sand for a while and see what it looks like later. It's later, so let's pay attention. We're getting opportunities.
Yeah, and Randy.
I have to agree with what both of them said. I kind of buried my head in the sand, and I didn't make any sales and just kind of sat back. And now we're getting to the point where, we have an incentive to move some product at this time. So I agree with Betsy. I'd be moving beans off the combine. Hold your wheat here at least into the December time frame. Corn, we've got a little bit of a carry. I think we could get a little bit bigger carry to that July time frame. But look at that spring time frame. I think basis levels are going to continue to be tight, especially for corn up here in the northern plains, because we don't have the acres. Mm-hmm. So the end users, the ethanol plants, the corn sweetener plant, they're going to be aggressively looking to get product throughout the winter and into the early spring. So keep an eye on that if you haven't locked anything in. I would be starting to watch a little bit of the next year's crop, as far as looking at doing some pricing. You should use an 18-month window, but be careful with China. The demand is here now. That normally starts to switch after the beginning of the year, and so keep an eye on South America, their acres, how things are going there, and also what China's buying habits are.
I'd just like to add one thing, just as a reminder. So Betsy brought it up about selling that old crop as a new crop hedge. I would be, again, I'm agreeing, very leery in soybeans because you could get a massive inversion there with a big southern hemisphere crop, but our supply, especially if yield doesn't measure up, now we have to ration it and the old crop really takes off. And maybe that's what we're seeing today in the market. It's a big update in the market. Yeah.
Great. Well, very good.
Yeah. Well, I can take over for you, Randy, so they can hear me. So again, Betsy Jensen, Bryan Doherty, Randy Martinson, let's thank our market panelists.
Working with it.
Yeah, and a reminder for all of you as well as everybody watching on the live stream, every single seminar that we host and record this week is available at rrfn.com. Click on the Big Iron tab and that will get you to all of the seminars that you need to know. Thank you all for coming. We have a few hats still floating around up here. We'll get you some more. Thanks so much for coming.